All right, what's going on, everybody? So, every day we got new people coming in, and it's good to just circle back once in a while and kind of go over things that we've picked up along the way that can really be helpful. But you have to keep in mind there's so many approaches to trading that when you talk about something generic like a scan, you have to fit it into the person who's going to be doing the day trade, the swing trade, the long term trade. So I threw out the question today on really getting prepared for a day and putting together scanners or watch lists for today or for a given day. But really, we can stretch that out into any kind of scanners. It seems like the longer term scanners are easier and less complicated for people to. It's the day trade stuff that really I hear a lot of people say they really struggle. And I get it, right? Because usually by the time it hits your scanners, it's already made some pretty good size moves and it feels like you're always late to the show. And then you got to wait for it to pull back if it pulls back at all, or the move is already done and now it's over and it's too late. So, of course, we can't anticipate moves, right? We don't have a crystal ball, but the sooner we can pick up something that may be moving on the day, the better. Now, there's a lot of expensive tools out there like trade ideas. Most new traders, I think, won't benefit from that because it's going to be really complicated. You'll struggle to even set it up and to know what settings you're going to want. And there's kind of workarounds for that. If you Well, let me back up. When it comes to trade ideas, it's usually low float stuff, right? Penny stocks, low float, short squeeze, or event driven stocks, things that have news, headlines. Yeah, we used to. We used to carry a stream all the time, and that's kind of what I was getting to is I was working my way up to it. But if you go to YouTube and you type in trade ideas, you will find a live stream nearly every day. Now, you don't get to change any of the settings, but it's free. So, you know, it's a it's better than nothing, right? The problem is if you're not chasing low float penny stocks, then that free online YouTube scanner may not really suit your needs, right? But I mean, it's a place to get started. So there is that. And I think there's different YouTube trade ideas scanners. So I don't think they're all set to low float, but that's usually the most popular. And then we post it in the Discord, right? Every day I do the watch list. It's almost always low float, high volume, gapped up. I don't like to go gap down in that list, only up. And so, yeah, it's the same. We want to get beyond that, right? And almost every website out there has a list of gap up, gap downs. There's like the NASDAQ.com website. um, Tasty Live. I think even the Bullish Bears on the main website has some sort of gap list that's just scrolling. If we go to Thinkorswim, there's a few places where you might find interest, and they're kind of behind the scenes. So I'm looking at the ES here, and if you look at the news on the ES, usually around 6 o'clock in the morning, you'll see these two posts, and I'll take a picture to where you guys can uh, read it better because I'm pretty sure that's hard to read on the stream. But it's called the North American Morning Briefing, and there's 2 pages. And I say it's under the radar or behind the scenes because it's on the ES futures. And if you're trading stocks, why would you think to look on the ES futures for that? Right? Like you wouldn't. It just doesn't make sense. But that's where it is. Now, I think it also shows up on SPY or SPX. And that briefing has analyst upgrades, analyst downgrades. It oftentimes will give you a heads up if there's a particular sector, industry, index that's getting some attention, what we call thematic plays. So it can get you pointed in the right direction of where you should be looking. It's not going to solve everything, right? But it's more of a what happened in the overnight hours or what happened on the weekend. And now we're back. And what should I be looking at? And it's free, right? It doesn't cost you anything. And it just, if there's something there, great. If not, we move on to the next thing, right? Yeah, Bloomberg. Um, there's like 5 things you need to know from, I don't know, what is it, Benzinga or something. There's free emails that you can get from so many sources, but a lot of them have the same symbols in it, right? Every day. Because like this morning, China really fell out of bed with their earnings and it hit all the usual suspects, JD, PDD. And then there was the EV news, right, from BYD, and that hit NEO and XPEV and Li Auto. So it was what everybody was looking at. Should have been what you were looking at. And if you're thinking, I don't know what you're talking about, I didn't hear any of that this morning. Why not? You know that's the kind of thing you would want to answer. How come you didn't know about that? It seemed pretty obvious to me, but so you want these headlines, these ideas without getting bogged down into the weeds, right? We can't spend all morning long reading big exposés on why we should be looking at, I don't know, utilities or something, right? We need short, actionable information so we can move on and continue to prepare for the day. I tried to do weekend work or um, overnight work. And the idea behind that was, say, this evening, 6, 7, 8 o'clock at night, I would scroll through the charts, hunting for things that may be in play tomorrow. I got to say, that was a complete waste of time. Very, very rare did what I find today show up as actionable trade ideas tomorrow morning. It felt good at the time, like I was really putting in the work, but it didn't make me much money. And it just a waste of time. So you can try that overnight stuff if you want. Maybe you'll have better luck. I have found you just have to get up early and do the work in the pre-market. So if you're not a morning person and you don't want to do that, I don't know. Good luck, right? Because I haven't found any other way to do it. Then there's the idea on whether or not you're going to trade actually in the pre-market with stocks, not futures, of course, because it doesn't matter with futures. But if you're doing stock, You got to have an entirely different approach to trading to deal with stocks in the pre-market. When the pre-market opens, when your broker will allow them to be traded, all of that has to be taken into account. Um, Robinhood and Webull offer it, and on those platforms, they have scanners to show you what's moving. So that's, it kind of built into the system. Yay! But it doesn't really give you much info on the why, right? At least, I mean, I don't hang out on Robinhood, but the last time I was there, it didn't have the background. Maybe they've put the news sources in there now where you can just click on it and read it, but they didn't used to. So then you just got all these names that are moving, but no background on the why. So what I try to encourage people to look for is more than just a one off. If it's one single name in, say, industrials, it's probably headlines. If it's 11 names all in the semiconductor space, it's probably a space, right? The whole sector, the whole industry is getting lit. That can really get you pointed in the right direction because then you can start shopping around for the best one, right? If all of the semis are going, then you can pick one that's in your price range. You can pick the one that has the better options. Maybe pick the laggard that hasn't really made the move yet. That sort of stuff, right? And speaking of getting ahead of the game, economic events are pretty standard nowadays, right? We're all pretty hip to the idea that economic news moves markets. But there's also events, Bitcoin events, for an example. This week they're in Vegas, they're having a big show, and Bitcoin is getting a lot of news and a lot of attention. If there's AI conferences, Bitcoin conferences, EV, anything like that, you want it on the radar in advance because those we can see coming. If there's going to be a big product launch, um, Apple with their phones, they're pretty consistent on when they do that. They give a good announcement. Google last week had the big Google AI Insiders, I don't know what that was, conference. So those can be helpful, useful, and we can get ahead a little bit. Otherwise, we're pretty much stuck with what's moving today and does it fit my criteria? You do need to build a list of things that you're willing to trade. And usually that matches accounts, right? If you're trading in a small account, you really don't want $400 stocks in your list, right? So that's obvious. It's a given, but do a little extra work if you're, say, willing to trade options or not willing to trade options. Now you've got a list of stocks under $50, for an example. And out of those, which one has options that are decent? And then which ones don't have earnings or is moving for a reason other than earnings and why? So that we can, tie it into a trade. Those event driven trades usually are short lived, right? They get a little bit of news, it's really violent, and then it just settles back down to nothing. And if they keep going, great. Then, you get something that lasts all days or even lasts a couple of days. And what I recommend to people when it comes to those kind of situations is find where it happened in the past and go in and study what it looked like, what kind of news was coming in. And I pulled up DJT just for an easy example. It got lit up back in September and it just roared all the way up to $50, $55. And sure, there was one really big day where it got nasty. Other than that, it was just gap and go and go and go and go and go. It was showing up on the scanners every day. It had a lot of media attention, lots of volume, and it just kept coming and kept coming and kept coming. So use those kind of examples because we will have that happen again. Not with this particular stock necessarily, but when you get these companies that get a cult following and a constant repetition of getting hit every day, they'll continue to show up and play until it finally breaks, which is what this did, right? It finally broke and it's done for now. It'll come back. So will Riot and GME and AMC and all those other ones, right? They'll come back. So it cycles around. So we've got the list from this morning report that I mentioned. Then we've got something called um, use the news on Thinkorswim. So I'm going to add a widget here, and it's right here, use the news. And we can bring that up. And even in the pre market, it does a pretty good job of showing you things in their groups or sectors: infrastructure, industrials, financials, pre market movers, right? And it's in plain English. I don't have to try to figure out a bunch of acronyms and the ABCs of all these different things. If I'm looking for analyst upgrades, analyst downgrades, there's been a lot of mergers lately. Drug trials, FDA approvals. It's really nice, right? It breaks it down in short, simple, sweet, color coded. What's not to like? So, that list may be a bit too much. It's 235 names. So maybe you take that, you stick it in the scanner, weed out the ones that are maybe too expensive or are ADRs. Maybe you only want to play, US stocks and you don't want to trade China ADRs, for an example. Who knows? Filter it out so it's not 235 names. Kind of weed this down. But even this, with that pre market mover, if I don't have one of these other reasons to understand why it's moving, then it's just a generic name on a generic list that's no better than I could have got from nasdaq.com or Benzinga, Bloomberg, whatever, right? All those ones. We need the why behind it to have a better idea of what we're working with and whether it's going to stick or not. And sure, I mean, we can keep our eye on the flow. Is what we all do, but it helps to have that background and that why. Why is it moving? And then is it lifting all boats? So that if it is a name in the energy space, are the other names in the energy space moving with it? And what kind of energy? Solar, coal, uranium, nuclear. What kind of energy is it? The more we can understand the moves that we're seeing in the pre-market, in what group, sector, industry, the better we can try to formulate a tradable opportunity. So gap lists are pretty common. If you are setting up a gap list, one thing that I've used before is breakouts of the previous day's high or low, right? It's a pretty simple one. It's called an inside day breakout. So let's get off of this trash and, oh, I don't know. Let's go to Amazon. Why not? So if we're looking for an inside day breakout, we closed up here, even though it's a red candle, it's a hollow red candle showing that we closed higher than we opened, but we also closed lower than the previous close, right? So lower close, it's red, but close higher than the open, it's hollow red. It's a trend color candle, right? So we closed there and then we opened here and we've run since then. Inside day breakout, obviously, we opened completely outside the previous day's range. Now we fell down and tagged that, and then we've continued to run. And now we've broke the next level. There was, I always forget this guy's name. I don't remember. He's got a name for this where it you look left, and if you're breaking out of this level, then you're breaking out of that one, and then the next one, and the next one, and he's got them like popcorn stops or something like that. Because you got to think about where the traders were in this position, where their stops were at. So when we broke out of that red candles day, we fueled all those short traders stops. They had to buy to close. That added to the buying, that pushed us higher. Then we got into this day's close and all the stops that were up here, right? And of course, those would have been shorts. So these stops are buy orders. That could have continued to fuel the move to the upside. It didn't. We stalled out. We came back in again. So either there wasn't a lot of stops up there, or they were higher up than what we went, or they didn't trigger them, right? They just, whatever. We didn't go higher from there. But if it had followed through, then that's another one that you can look for on those continuation plays. But the idea is, how big is the gap? So if I'm running a pre-market scan or a scan at the open, I don't want just a gap up. I want a gap up of a particular level. Yesterday's high, last week's high, whatever I can point to say it's higher than this. Then I can use that as a line in the sand, either as a place to be able to get in, like when Amazon fell down and tested Friday's low or Friday's high. That would have been a good one. Look at it on the intraday. We opened, we fell down, we bounced, and then we ran. It's not a coincidence. We do that often. I look for those kind of plays because I'd rather not buy it after we've ran up in the pre-market and we're sitting way up here. I'd rather just wait to be able to trade it off of a level. And that's a really nice level to trade off of. So if it fits your qualifications, the stock's not too expensive, or the stock has options that it has, for an example, gapped up outside of yesterday's high or down below yesterday's low. Now you've got a setup. That one can get added to the list. Now, I don't know, I've seen people with the 32 grid, nightmare. I've never been a big fan. But if you weed that down into, say, something a little more manageable, let's try 12. Even this seems like it's too much. But what they were doing on the old TD Ameritrade YouTube videos, you'd have what, Connie Hill, James Boyd, a couple of the other guys that were CMT technicians working at Schwab. One of the things that they liked to do is they would set their charts to something like a 5-day or a 7-day chart, something real close. And the idea behind it was, if they're just looking for a short term trade, that they don't need 9 months, 2 years. They just need the last 4 days, last 5 days, maybe, and a really zoomed in focus on, for an example, Amazon's breakout, gap and go play, and marking out yesterday's level. Now, we didn't know at the time that it was going to fall down and test that level as good as it did, but we could have prepared for it, and we could have had other charts that we had found in the pre-market giving us the same sort of setup, right? So that way you're not trying to watch a whole watch list of stocks. Maybe out of the 20 that we're moving, 4 or 5 meet your qualifications, and that's the ones you put on the list, or put in the chart, I should say. The rest go to a list, set your alerts on some price levels. Now you're ready for the open without getting overwhelmed, right? It's not a perfect solution, and it helps if you have more than one screen. If you If you don't have more than one screen, try to use something like a phone, even old phones. Use them for your watch lists. Bring up something like TradingView or even Thinkorswim and put the watch lists on your phone, put them on a phone stand on your desk. That way, even just something as simple as that can give you a list of stocks that you can keep your eye on without having to go buy another screen. Now, I've got four screens, I've got plenty of real estate, right? I don't need that, but I get it. If you're new, you don't have a lot of equipment. Now, I like these sort of breakout of yesterday's levels test plays, but that's just one trade. You could focus on that, narrow range days, earnings trades. All right, there's a million, right? But if you don't have a trade strategy and you're trying to approach preparing for the trading day, what the heck are you preparing for? There's way too many things to look at. If you don't have a plan, you'll be looking at everything. You won't be able to monetize that. At least I haven't been able to monetize it. I need a focus, right? Something that, like a funnel, the way I was taught to do this. You got all those stocks up there, right? And you're trying to funnel it down narrower and narrower until you've got three, four, five stocks. To me, the only way I was able to do that is, does it fit a trading style, a trade setup, a trade plan? If it doesn't fit the plan, it doesn't make it to the list. I don't end up with a list of 70 stocks. Now, once the day is going, I've got this shared in the chat. You might need to do a little coding for it, but once the day is up and running, these are from Thinkorswim, and it's called the high-low graph. I found it when I was going through Thinkorswim's indicators and watch list columns. I went through every single indicator and watch list column trying to figure out what it does and why it was on the platform. I'm a nerd, right? It's a bit tedious, but how do you know and what's in there unless you look? So I was looking around and I found this high-low graph. And what I found was the graph goes from a -1 all the way up to a +1. And of course, zero is the middle. It can get negative or it can get positive. So, okay, if we just look at the top 0.5% and the bottom 0.5%, then we could find the extremes, the most bullish and the most bearish. And then how many names pop up in my bullish list or bearish list kind of gives me some perspective on market bias. If the bear list is really empty, maybe 10 names or less, and the bull list has 40 or 50 names, well, it kind of stands out. And then what names? Semiconductors, utilities, staples. So, what I found with this one, it works all day long. So, of course, you don't need it at the open because everything's moving at the open. Use your own lists. But after, say, 10:30 or 11, and we get through lunch, and now we're on the other side, and we're all trying to find something that may break out and continue to run, or may fall down and just give it all back again. That these scans do a really good job. And they get you there a lot of times before the move, like AG. I don't know if AG is going to make a move or not, but look at that. That looks really enticing. And if it breaks VWAP, I think we could get below 6, maybe even get back down to 5.9, 5.85. Who knows, right? It's just in a really tight afternoon range after a good run up, and it hasn't broke down yet. So I like that, right? It got us focused on this before it's made a big move. Cool. Or AIG, another one, big run up. Looks a lot like the market today, right? It's what the S&P did, the Nasdaq, big run up, and now we're stalled. Okay, it's not so impressive today because that's literally what the market did, but it would be more impressive when you find something that looks like this on a day where the S&P and the Nasdaq has gone sideways all day, right? Or maybe even have fallen all day and we've found ones that were up. My internet went all wonky there for a second, huh? I'm back. You back? All right. Don't break things, huh? So that gets you pointed in the right direction too. Now, I mentioned that I shared these in the chat before, and that's because to make it, you have to do a little bit of work. It's not complicated, and I'm willing to show you guys real quick because it is easy and we are recording. So you'll be able to go back and watch this later if I go too fast. First, add the high low as an indicator because we need the code. So you click the little gear icon and type in high low, and you'll see it's called the high low graph. So just add that, and you'll notice it's got this little lock next to it. Click on that, and we get the code. That's what we need for the scanner. So we just highlight all of that and copy it. That's Control C for me. If you're on Mac, well, good luck because I don't use Mac. So figure out how to copy that. Once you have it, go into the scanner, and we want to make a scanner that's going to use those settings. Now, I've done this by making an indicator first. You can do it that way, or you can just go in and write it into the code. And I've tried to share this without going through this step. Some people it worked, and some people it didn't work. So if it was as easy as me just sharing you the share link, I would do that. You can see where my code is right here. And then I use some of my own settings. I want a market cap of this size, and I'm looking for something that's got a minimum sizzle. But those are my own unique settings, right? You don't need that. And you might even want to add more, something like the price of the stock, RSI, whatever it is you like to use. So to get this, you need to add a study. You just go in here, add study, go to custom, click the Think Script editor, and then post all that stuff that we just copied from that watch list column. This is the high low. Now we want to find something. Now, I can't have two things with the same plot. All right. So we got to turn this into a definition. And now we're good. This would be the bullish one. A few things. I didn't change the setting on the time. I never have. Now imagine that. We're talking about intraday trades, but I've never changed it off of the daily aggravation. I've never needed to. It doesn't mean that you can't or that you shouldn't. I don't know. Play around with it. You may find that you like it at a lower setting, but I've never had to do that. So This is the code that you want, and you can just copy and paste that right into your scanner and then hit OK, right? So once you have that, and I set it at 95, it's supposed to be 90. So let me just edit that for you real quick. That's a little too tight. 95 is too much. Set it at 90. All right. Once you have that, you can add your other stuff, the stock cost, maybe volume, whatever you're interested in. And then for the negative, you would do the same thing, but the other way around. You need two scanners, right? One for the long side, one for the short side. And I put both of those in the chat. So all you got to do is save this one and then start another one and make that the short one. Now you could mix them together. I've done that. I didn't like it. I like them separate, right? But you do you. If you are unfamiliar with some of these things that I'm using here, sizzle is a thinkorswim word that means 5-day average. They wanted to offer people something that nobody else had, and so they made it up, right? Isn't that how it works? They just created it out of thin air and said, let's call the 5-day average a sizzle. Ta-da! Yay! So you've got volume sizzle, put sizzle, call sizzle, volatility sizzle. All of those things are on Thinkorswim. I'm using stock sizzle, so not options, but we could have. And then I've got market cap, just so that I'm avoiding those low float penny stocks for the most part. It's not perfect, but you get the idea. Now, because of that sizzle, a lot of times my scanner doesn't do a lot in early trading, or it'll bring me things that are really blown out, up, 75% in a single day. Crazy stuff. Not interested in those things. But this scanner does a really good job all day long. A couple of things about Thinkorswim that will help you better understand what's happening when you're running a scan. This thing pings the server, right? And it says, hey, has my qualifications shown up on anything out there? And if it has, it shows up in the list. But it's not pinging every second. It's not even pinging every 30 seconds. Not even one minute. The average ping is about 5 minutes apart. I know if you're thinking, I'm a day trader, what the hell? Every 5 minutes, it reaches out and asks, hey, have the settings been met on anything out there? And if it has, the list will change. So, as you can imagine, 5 minutes is a long time. Now, you can force it to update and ask that question, but you have to force it every single time, which is a bit annoying, right? But if you're, you know, diligent and persistent and you want to know if anything has changed, then you can just ping it again. The way you can do that by using the watch list is just to update something on the watch list or leave that and come back to it again. For me, if I'm trying to bump it, which is what I call it when I'm trying to update the server, if I'm trying to bump it, I leave it in the scan and I just hit scan. I know it sounds crazy complex, right? You just got to hit the scan button and it just does it again. But hey, it works, right? Now there is a way to um, validate what I'm telling you. There's some changes in here that you can say, "Hey, alert me when this scan changes." And if you turn that on, just watch how long it takes for the list to change. It'll take about 5 minutes. On good days, maybe 4.5. On not so good days, maybe 5.5, 6 minutes. Now, that was true when TD Ameritrade owned things. And now, well, Schwab owns things. So maybe they're a little slower. Maybe they're a little faster. I'm not expecting anything to have changed at all, but who knows? Now, I've got mine set to look at weeklies. And as you can see, 11 stocks showed up in my list for the long side, bull side, 13 now. I did this and I tightened it up because I did not want 50 names in my list, right? Especially if I'm looking for a tradable opportunity. It's too much. I need to narrow it down. So my goal is not to find as much stuff as I can find. My goal is to show me the tightest scan that I can run with the least amount of names on it that hits the most of my qualifications. If you get it too tight, you won't get anything. And that sucks, right? Because then you're missing everything. You get it too loose, then you're going to miss everything because you're buried under too many names. You can't keep up with them all. It's hard for me or anybody else to tell you what you can handle. Can you handle 7 names on the list? Then great, do that. You know, I know people that can handle 30 names. I'm not one of them, but again, you just do you. Now, if you can match this list with something else, you'll be ahead of the game. Analyst upgrades, analyst downgrades, M&A plays, drug trials, investor day events. That way, again, it's not just some name on the list, right? It's a name that ties to a sector, an industry, something that is giving us a reason to be bullish or bearish in the first place, and understand why it should run, or heck, understand why it might stop running, finally flip, and begin to fall. So this scan will get you a long ways. If we back up a little bit now, I talked earlier about having your 8 grid list with the stocks that you want on it that you're going to watch at the open, and then putting the other names on like a watch list where you can set an alert. TradingView, um, Fidelity, Thinkorswim, they let you do alerts. I think Webull does. I can't remember if Robinhood's new update allows you to do that or not. I think it does. But setting alerts is pretty common nowadays. You can get away with it just about everywhere. So take advantage of it, and use simple things. There's no reason to get all complicated with it. If it's yesterday's high or low, last week's high or low, or just a simple pivot point, maybe an anchored VWAP, something like that, right? Where you can just right click, create alert, and just get it on there and move on. So you're not fiddling with it for 30 minutes. And if you do want to make something complicated on Thinkorswim, save the template so you can do it again. So, this is an anchored VWAP in yellow. Maybe I want to use that. I create a custom alert. I save it so I can use it again. I'm going to just pop my alert box up here, my alert book. So this one's not complicated at all, but we'll just hit create so that the book pops up. In here, it asks you if you want to do something more with it, turn it into a template, or do one of those other things with it. That's where you got that opportunity. So if you do make something complicated, now you've got a way to not have to do all the steps every time. You can just save it and change the name when you need it. Now, I mentioned in the morning briefing this morning the alpha protocols, and this rarely hits. Yeah, look at ABR go. Nice continuation. The alpha protocols do not happen very often, which is why I like them, because they're so rare. But I built this because it's how the algos play. Not all of them, but there's this algo out there that will trade a basket of stocks. So that if oh, I don't know, say Powell says something about cutting interest rates, it will respond by trading this whole basket of stocks. And I thought, well, that's really cool. How come we don't do that? To even begin to do that, you need your own list. Like, you need to put together your own basket of stocks. For me, it was pretty easy. I just went through the S&P and the Nasdaq 100, and I looked at things that had really good options volume on a day-to-day basis. So you could go to the CBOE and get the list of most highly traded options volume over the last 30 days. You can use that list. You can just go through by hand, looking at names in the S&P 100 and looking at their options, seeing if they're liquid enough for you. And then, of course, can you afford them? Because if they have crazy options prices, maybe that answer is no, right? Like NVIDIA is not on my list in the alpha protocol because those options are just crazy expensive. So you put this list together, and if it's a crazy bullish day or crazy bearish day, you buy calls on every name on the list, or puts on every name on the list. Or if you're just doing longs and stock, then you buy stock in every name on the list. It's not complicated. The trigger is advancing and declining issues. At least that's the way I built it. But I'm very strict with the protocol. It needs to be like 98, 97, 98, 99. You can get as tight with that as you want. And then for me, it has a time frame in it. I don't want to see 99 names at 3 o'clock in the afternoon. That's not going to do it. Right. But if it was 97, 98 names at 10 in the morning, I would buy everything on my list. As you can imagine, we don't get that kind of trigger every day. Once you're in everything on your list, there's usually a dud, right? One or two that just really are not performing. Cut those and let the rest do their thing. And then you close them all by the end of the day. Usually they get closed around noon or 1 o'clock, but it goes. Now, this is just a simple advancing and declining tool. And while it looks fancy, it really is not any more awesome or amazing than the ADD, the advancing and declining issues. So $ ADD. Now this is for, the NYSE, but it's the same concept. We can go to the S&P version, the NASDAQ version. So if you don't have Thinkorswim and you don't have that advancing declining market watch tab, it doesn't matter. You can get that information just by going through the market breadth. Now, if you're doing it on the Russell, TradingView doesn't have it, but if you're doing it on the S&P, the Nasdaq, the NYSE, you should have it. So it's not that big of a deal. So we can set up and use these use the news tab, the high low graph, the list that we got from the ES futures, but we've also got this one that I noticed a lot of people don't know about because they hang out on Thinkorswim in paper, and you don't have this one in paper. It's called Trade Flash. Now, I've already got it loaded up here, but I wanted to show you where to find it. So it's another gadget. We go to Trade Flash. I've actually got it detached. And what this is doing, it's run by a company called Hammerstone or Hammersmith. And it's running from like 7:30 in the morning. No, a little sooner than that. Maybe 6 o'clock in the morning every day. And I'm going to scroll down to where it started. This service is crazy expensive. It was one of the most expensive services I'd ever come across. I don't have it either. They offer it for free on a trial if you want to go check them out. I'm not trying to sell you anything, but it's called Hammerstone Markets. It comes with its own application that gets installed onto your desktop computer, and then they send you emails. It's got like different tiered levels of subscriptions, and it's a robust service. This is a taste of that service built into Thinkorswim for free. Now, their service is like hundreds of dollars a month. I don't even think they run a weekly, but they might. And yet you get a taste of it right here. It doesn't cost you anything, right? This has pre-market movers, bullish, bearish, news, M&A deals, analyst upgrades, downgrades, all of it in the pre-market. Then when we get into the open, then we get big orders on options trades, these big delta positions, because they're monitoring everything from a delta standpoint. So how big is it? And was it positive delta, negative deltas? But it's nonstop all day long, and it's searchable. So if I wanted to come in, and just check out the Qs, boom, there's what's going on in the Qs or Apple. So whatever it is you're looking for, right? If you've never come across this Hammerstone before, go check them out. I was really impressed by their service. I didn't need to use it. It seems like, trying to swat a fly with a bazooka, but hey, it's there, right? Now I use that thing every day because it's just getting me pointed towards things that are moving in the pre-market and a lot of times some why behind it, which is really nice, right? It saves me a little work. Now, Thinkorswim has news built into the site. I know it's not paid news, and I'm sure you got a subscription to some paid news service. But a lot of times, the information that I'm looking for, the why behind something, it's right there. So, if it pops up on the trade flash, And then I follow it up. I get in here, I see the news behind it. I got more information on what's going on. And they do a really good job with helping us correlate the names of whatever's moving. So, like this morning with the EVs, I mentioned that earlier in the stream, right? Like the EVs got whacked and China was getting punished on bad earnings through JD and PDD and all that. This is where I started to get that information in the first place. And then from there, I just did my own DD, but it gave me a place to start. And I didn't have to buy a subscription to anything. I didn't have to log into some other account somewhere else. It was just right here. A lot of times I post this stuff in the chat, right? Now, Trade Flash is a widget. So you would find it under the plus sign down here, add gadget. We got any chocolate? Yeah, thank you, baby. You got Trade Flash and use the news. Those two together, pretty handy, and you didn't have to code anything, right? It's nice. Grabbing a piece of chocolate here. Maybe it's the new headset, but it just sounds like a scratchy. Maybe the chocolate will make it better. Now, if you didn't know it, Thinkorswim has these scrolling marquees. You can set them to whatever watch list you want. What we're looking at right now is my home screen. Now, yours is going to look different because I had to put all these pieces together. Up at the top, you got a tab called Home Screen. Once you get in there, it's got two sections, and then of course you can kick the widget out here. So you got basically three. The events on the right are a really good way to stay ahead of economic events that are coming down the road at us. And then, of course, you got markets when they open. Just a little bit of a hint, they don't really check to see if the markets are open or closed. Me, as a typical American, I don't pay any attention to any other country's holiday. Why would I? I'm a self absorbed American. So I don't know if Europe is actually open or if they close for a holiday, or Asia. So don't trust this if it says, Asia's going to open in 4.5 hours. That may not be true. They may have holiday. For that, you'd want to go to a website called tradinghours.com and check to make sure they're actually going to be open. But if they are open, it's a really good way to see when a market's going to close so it doesn't catch you by surprise. Now, I've got this set up the way that is comfortable for me using the heat maps and these two scans here, but you can really pimp this out how you want, and it'll even do your own trades, your own portfolios if you want it to. I believe this is a plus minus. So, like my bear and bull scan, I'd have to check to make sure, but I'm pretty sure that's what I got it set to. Yeah, that's the high low 90 negative, and this is the high low negative positive 90. And then, of course, down here, analyst downgrades, analyst upgrades, and my country ETFs so that we can look, and see what's up this morning. Brazil, South America, Korea, whatever. So it's comfortable. It's the way I like it, but it's handy. It's useful. If you don't know anything about the home screen, it's worth taking a little look in there. And then the visualize tab. Now we were already looking at the index watch. These are detachable, and you can put whatever you want in that list. So if you make a Mag 7 list, for an example, you can keep track of what the Mag 7 is doing, and they're big enough to move the markets. So you want something like a Mag 7 list to see if they're getting a lot of volume, if you've got any outliers, anybody going in the wrong direction. And these are small. You can really scrunch this thing up tight. If it's a bullish day or a bearish day, the Mag 7 are very likely involved in whatever is going on. So keeping track of them as their own little group or their own little index really helps out. But you can stack these up. It has one for every index. So you got one for the Russell, the Dow, the S&P, the Nasdaq, the NYSE. Stack them up. You can also do your own particular watch list. I know a lot of traders who trade the same stocks every day. They're like Tesla players or Apple players. And then if you are trading Apple, maybe you're also trading Apple's suppliers, right? Because that's the few people that I know that trade Apple all the time. That's how they do it. They trade Apple and then they trade the suppliers, and it just seems boring to me. But whatever, to each their own. One more piece. Now I know at first glance these heat maps don't look like much, But there's a lot here that can really help out. One, when you put a list in here, it automatically sorts it into their industry or their sector. Even if it's just your own watch list of stocks that you put together, it will automatically sort them for you. And you can open it up and dig even deeper. So we can see IT is doing good today. Now that's kind of vague. So we could tighten it up and say, well, what is it? Communication, services, chips, software, right? We can really dig in, find out what's moving. And that's handy. Really fast way to see what's happening out there and where I should be looking. I don't like using this at the open. It's another one of those that I don't think really has value at the open because everything's running. I don't need something telling me where to look at 9:30, right? But after say 10:30, 11, things start to slow down. I'm looking for that afternoon play. That's a easy on the eyes look around at what's happening without squinting at a bunch of watch lists. Now, it seems like there's some issues with what you can put in it. I've noticed over the years, for an example, my ETF list that we were talking about from the home screen, that's not in there. But work with what we got. Now you can find things for free. Finbiz, they've got free scanners, bar charts. Oh man, there's so many of them out there. And what you'll notice with a lot of them is they're gonna bring you the same stuff, right? Because if something's moving big, it's gonna hit every generic scanner out there. Which is why I like those high lows in the afternoon, because the moves have already happened through the morning session, or we've been sideways all day and we haven't done anything yet. But this scan does a really good job of helping us find things. Look at how good app came out of that run. We were looking at this when it was still range bound. Nice follow through. So when you're putting your scanners together and trying to put a watch list together with that, it will really help if you've already got a trade plan. To me, it's the first piece of the puzzle because if you don't have a strategy or a trade plan, how do you know what to search for? Right. So for me, I like inside day breakouts and I like narrow range plays. So inside day or IX10, something like that. I love those. And I make that a part of what I'm looking for in the pre market. Yeah, IBKR is rough. Um, I had clients that were on IBKR and I was teaching them options, and I had to go get the platform just to figure out how to teach them what to do on there because it was completely different than anything that I was using. So I I get it, man. IBKR is not fun. It's a tricky little booger, but it's a really robust platform. I gotta say, it's difficult and it's tricky, but it's got a lot of features in there. It's much better than, say, Fidelity. Fidelity's got a trading app and it's trash. It's easy to use, but it's not very good for trading. And don't get me wrong, I like Fidelity. I use them for my long-term trades, like long term, right? Not day trading and short term because it sucks. But their long term stuff, it's okay. And I just do those trades right on the website. I don't even use the app. So for IBKR, my recommendation has always been hit YouTube, try to find videos from them, preferably, or from someone who's doing how to videos that are not trying to sell you something. And I know that I have found videos like that before because it's how I learned how to use IBKR when I was helping my clients with it. It may sound like an odd distinction, but if they're not trying to sell you something, it seems like the video's content is really focused on showing you how to use that platform. But if they're trying to sell you something, like get you to sign up for some courses, use their affiliate links and all blah blah blah, then they tease you just enough to show you maybe one thing, and then that's it. And the rest of the video, 20, 30 minutes long, is just some spiel that doesn't get me anywhere. So that would be my recommendation. Hit YouTube, try to find someone who speaks in a way that you understand. I don't like YouTubers who are like racing the clock, speaking at me at 900 miles an hour. I hate that. So when I find videos like that, I just skip it, right? And I go to somebody else. I don't mind if they talk really slow because I just speed the video up if I need to at that point. But man, I hate it when they're running crazy fast. There's a lot of strategies out there when it comes to day trading. Um, I don't focus too much on those low float squeezes. I like my inside day breakouts or gap and go plays. And I tend to trade more price pattern stuff. Morning star reversal off the daily, big gap down on a weekly, moving average crossovers on a weekly or a monthly. Those get me pointed in the right direction. Then, I can bring them up on the intraday, find opportunities to get in, dig a little deeper, whatever. But if you're struggling to put a trade plan together in the morning or a trade list, I mean, step back and really focus on what are you trying to trade? Because if your only qualifications are, I'm looking for things that are going up or I'm looking for things that are going down, it's too generic, which is why you end up with a list of too many names. You got too many things to look at, and you can't get zeroed in on a small actionable list of stocks to play. Now, maybe that doesn't fit everybody, but it seems to fit the most people when I'm talking to someone and they say, man, I'm really struggling at the open to find things that are moving before it's too late. And I get it. If it's already gapped up and moved a long ways, what are you going to do? Right. I mean, there's not a lot you can do if it's already gapped and made a big move in the pre market. But take something like City. That's a really nice move today. And I get it. The whole market looks like this today, right? It's not exactly hard to find something that was just grinding higher all day long today. It's trickier to find something that's moving like that on a day where everything maybe was down or was range bound. I also like to find things like this. So Costco, really nice example, had an intraday wedge forming. What a great find. It was underneath VWAP, tightening up with these lower highs, equal lows ish, and then it broke over that wedge, broke over VWAP, and made a run towards the high of day. Nice setup. We could see it coming, right? It didn't sneak up on us. If you haven't read it yet, there's a good book on this short term trading called Hit and Run Trading. I've shared the book in the chat, so you should be able to search using search in the upper right corner and just type in hit and run trading. It should pop up. If it doesn't, I mean, I can always share it again in the chat, but shouldn't be that hard. Um, there's a website that goes with that. Actually, it's kind of weird. The first time I ever seen this site, I thought, man, that looks janky. The website is called Swing Trade Bot. Now, I had a subscription here for a whole year. I got rid of it. I didn't need it anymore. It wasn't very expensive. Um, Even without being logged in, you can run their scans. You just can't dial those scans in and get really specific with stuff unless you get an account. So if we go to end of day, and it does do intraday too, but we go to intraday or end of day, all scans. This is the strategies. You may be looking at those saying, I don't know what the hell that is. Boomer sell setup, expansion, pivot, sell, setup, Gilligan's Island, Jack in the Box, non ADX 1, 2, 3, 4. All of these are trades from that book, Hit and Run Trading. The really cool thing about this site, even if you've never read the book, let's just pick one of these. Slingshot bearish. Well, I want the slingshot bullish. Let's scoot down here. Slingshot bullish. So I'm going to click on that. It load up another page, and here are the rules for this particular trade strategy called the slingshot. Now, you can see if I wanted to adjust price so that I'm not getting a bunch of penny stocks, or if I want to adjust volume, I'd have to have a higher subscription level. But without even being logged in, we can see the stocks that it found without the filter. And you know what it is. It gives you the rules, the qualifications, all of that, right? So this is a good way to go because it gives you some examples of what others have found useful. It gives you qualifications and a checklist to kind of work out on your own. And if you take the book and connect it with this website, now you've got kind of the best of both worlds. The book explains the strategies. The website has those strategies already built into a scanner, and you don't have to buy it. I'm not logged in. The scanner worked, right? Now, if you want intraday, you're probably going to have to buy something, but the book is free. I've put it in the chat, and it tells you what the rules are. So if you can code or if you can set those criteria up on your own platform, then you can do it without these scans, which is at some point what I did. And it's why I only had a subscription here for a year and then I got rid of it. I didn't need it anymore. Here's that book, by the way, in case you can't find it in the chat. And then here is the website. We're still holding it anyway. We just can't seem to give it up. All right. I jumped over to my website for a moment because I put together this blog post. It's like it's two posts, really. I shared this link this morning, I think, in the chat. Just scroll up. This is the morning briefing web post that I had wrote a while back. But from there, if you've started to read it along the way, there's a link to another page. This one goes through a lot of the stuff we were just talking about today: news, events, trading hours, website, earnings that may be moving things around. I didn't mention it, but there are popular CEOs that you may want to pay attention to, right? Like follow them on Twitter or something. Jamie Dimon, Jane Fraser. If you don't know those names, learn them. It helps, right? When they're out there chipping teeth, they can move markets. And then activist investors are worth keeping an eye on. Now, I'm not telling you this so that you go out and try to trade what they're trading, right? I'm not implying that you should just follow them around, but listen to what they have to say because a lot of times they'll give you a heads up where they're piling money into something or they're pulling money out of something. And those activist investors, a lot of times they're the catalyst, like Carvana. That run up from $2 all the way up to $200 was a part of activist investors. One example, right? But still a really good example. The move is basically done now, but it was a fantastic run back up. And it started with a really good story, the father and son team, and then the activist investors bringing in the money and helping them restructure that debt. And it just became this. So, for me, keeping track of if they say go long or go short, I'm not listening to that trash. But listen to what they are talking about. And when they file reports showing you where they've been putting their money, that helps. It's got other talk in here about finance juice and keeping track of events like Amazon Prime Day, Cyber Monday, Bitcoin conferences. We touched on that a little bit earlier. Those events, a lot of times they just cycle around. They happen again and again. And AI has made it a lot easier to keep track of those events. You can hit AI up, and ask it, hey, are there any conferences this week in chips, phones, whatever, right? And keep up with it. Back in the day, I had to have a subscription to places like Seeking Alpha to keep track of that. And that's not a cheap subscription. I keep scrolling down because there's another link that I have that goes to yet another page that talks about this intraday trading. This gets into pivot points and options data. I do talk about writing out your plan, putting a theory together, a statement. That's a little deeper than, just your average day trade. But if you're using something like an inside day breakout, you probably want to have a set of rules for what that means to you and where the trigger is going to be for the entry and whether or not it needs to check yesterday's high or low, and you know what I mean, some rules, putting it all together. I must have skipped the other link. It does have some talk about how to measure things using the quadrant lines the way I do. I'm moving too fast. I'm probably just skipping over what I'm looking for. Oh yeah, no, there it is. So this other page, economic events, it's got some free resources that I use because again, I've got expensive tools, but that doesn't do you any good, right? Especially if you're new, just starting out, trying to do this without spending a load of money. So Finance Juice, FX Street, and then these events. Now, this isn't all of them, but these are ones that I tend to pay attention to. And some of them are really silent. Like you don't hear anybody talking about them. QRA, that's a really big deal. And in the last 14, 16 months, this is starting to get more traction, but it's been around forever. And you just never hear anybody talking about it. But QRA is a really big deal. And then the quarterly index rebalance. That's another one. Um, I don't think I put it on here, but when stocks get added or taken out of an index, right? Like it just recently happened where we just did an index rebalance. So of course we got CPI, PPI, non-farm payrolls, FOMC. Those aren't a surprise. But those events like Jackson Hole, right? It comes around every year. Apple, when they do their new phones, the Amazon Prime Days, Google I/O, which we just did last week. These events, when you can see them coming in advance, a lot of times it's how you get in ahead of everybody else. Instead of waking up the next morning and finding out, oh wow, yeah, look, hey, the conference is here, and look at the move it made in the pre-market. Dang, I wish I'd have known. Shoot, maybe next year. So if you haven't read it, take a peek. It's not done. I consider this a list in progress. I get around to adding to it a little bit now and then. And the same thing, I've been trying to put together a little bit of a, not necessarily a dictionary, but maybe something kind of like a dictionary. Yeah. Because we got all these acronyms. And of course, new traders show up and say, well, what does that mean? And of course, AI is making it easier, but there's acronyms that they're the same letters, but they mean different things. So if you're a doctor, maybe it means one thing. And if you're a trader, maybe it means something else. Or you're an airline pilot and it means something else. It sounds crazy, but that's what we run into, right? So at some point, I started putting together a post. I just got to find it here. And I continue to add to it. Market concepts. I'm pretty sure that's the one. Yeah, the ABCs of trading. So it's not a full list. Usually every other month. Well, no, I take that back. It used to be every other month. I don't think I've updated it for a while. Things like ADR, the AD line, right? Once you learn it, you know it, great. But where are you supposed to learn it? So this is part one, which tells me I have a part two somewhere. It's probably down in the page deeper. Looks like Jeremy posted a trade idea on AI. Let's bring that up in the browser. You know what? I gotta admit, Weeble's charts, they are nice and clean, huh? Not too bad. C3 AI, less than $30. Pretty cheap stock. He's looking at a September 19 expiration call debit spread. Needs to confirm a bullish trend above $25 or the 20 period moving average. And he's aiming for $32 to $35. All right. Let's log into some tools. This is the Trading Ticks website. I've got dealer deltas down below. Just generically speaking, if we're looking at dealer deltas or dealer hedging dynamics, if the dealers are long, then their clients are short, right? So their clients are, selling calls and buying puts. If the dealers are short, then their clients are long. They're selling puts and buying calls, generically speaking, right? It's not a day to get into the whole depth and breadth of dealer option dynamics. So we can see it's green implies that the dealer's clients are short. Now that doesn't necessarily mean that Jeremy's barking up the wrong tree, because well, one, collectively, people aren't always right. So they may be short and just be wrong. Two, if they are short in front of headlines or news and we start to pop to the upside, what do you think those shorts have to do? They got to buy to cover. And they're buying, adds to the buying, adds to the fuel, pushes us higher to the upside faster. So it gives us some insight to say, oh, yeah, the dealers are long in their dealer deltas, but their clients or their customers are short. So it's a good start. Why are they short? Look at the earnings. What's it been doing in the last two earnings? Trending lower. Now, that's not the end all of everything, but it gives us a little bit of insight on this stock price and this beatdown that we've seen since November of last year. Well, actually, there's the election, right? It always helps when you're doing analysis on a chart to connect the dots to economic events or events of note. So there's the election, the pop, the fade, the breakdown of the election. Now the inverse, the other side of it. I'm a big fan of what they consider reciprocation. If we had 20 points to the upside, we can expect 20 points to the downside. Doesn't necessarily work that way, right? Because we would need percentages, but you get the idea. Reciprocation. Collectively, when I zoom out, we can see that this is just trending down lower and lower. And that's a really good point. Earnings is tomorrow. We should look at that earnings, huh? 5 minutes to go. So instead of getting into this stuff, let's just jump back over to Thinkorswim. I honestly didn't even look to see if it had earnings right away because I did not expect that Jeremy would give us a heads up on a stock that had earnings tomorrow. That's not to say that he did something wrong. I'm not trying to say that. I'm just surprised that he pointed out a stock to us that's going to have earnings tomorrow without telling us it was going to have earnings tomorrow, right? Like he didn't say it was an earnings play. The uptrend has been pretty clear since the volatility change back here. We had the Liberation Day gap down, and we've been recovering since then, right? Now, I'm going to scrunch this up. I know it's going to be a little ugly for a moment, but it's how we can get to all these labels in the easiest way possible. AI has a 21-day pre-earnings average of $5. It's about 22%. It's got a 6.6% average move in the 8 days before earnings, about $1.50. After earnings, over the next 8 days, it averages about a half of a dollar to the downside. So that's our plus and minus looking at the last 8 quarters. Now I could go deeper than that, but eight's a good start, right? 8 quarters, 2 years. It's beat all 8 times. Now, remember what that stock looked like? This says it's beaten all 8. That's not what it looked like on the website that we were just looking at, right? But maybe that was revenue and I don't know, maybe they were looking at different things. Come on, Thinkorswim, don't break now, quitter. All right, so here's AI. Here's the actual in yellow across the top and Wall Street's estimates down below. And you can see very clearly it's been beaten. Um, Q2 2024, it got a little dicey. And we're in the midst of this current one. So nothing here. Otherwise, it's been very consistent in the outcome. Look at that straddle every time 5%, 5%, 5%. Boom, boom, boom. Let's get some more of those stats. All right. Just we were half done. We didn't finish. So since all 8 beat, we shouldn't have any big down moves, right? And by big, I mean greater than 5% to the downside. But unfortunately, half the moves have been down more than 5% within 8 days of the earnings release. Now that's some good numbers to have right there. That even if it beats, which it has done 8 times in a row, it can still go down. And it has a history of going down at least 5%. So not just a little move, but a considerable move. We got a market maker move of $3.13 and a one standard deviation of $1. That makes sense because volatility heightens the move. Look at the IV this time around. You can see how it looks different. Huh? Usually, when we look at a stock like this, it's got a very consistent earnings pattern, and that's normal, right? That's what we expect. This is not what it typically does. So this is another reason why right here to be very cautious about this earnings. And it's okay to just GTFO and stand aside, right? Now it's a cheap stock, less than $30. The options are probably very cheap, and there's nothing wrong with any kind of trade if if it's risking, like a dollar and a half, $2. And I mean, put a zero behind that. So you're risking like $10 a cup of coffee nowadays at Starbucks. But a lottery play should not be $200, $100, right? Gas station lottery should not be that expensive. So because this is so cheap, if you can find an earnings trade really cheap, then why not? You know what I mean? Like, why not risk 15 cents? Yeah. But you don't want to size up on earnings, especially in something like this that has a history of beating and going down after it beats. That's not good. This is a dollar and a half wide for 15 cents. It's a debit spread, far out of the money, very short duration too, by the way. We can see if we're trying to gauge what strikes to choose for earnings, we've got $3.50 expected over the next 3 days, with an additional $3 expected over the next 3 days. The market maker move is up there. So we put those two together. That's $6.50. It's actually a little more than that, right? But we don't have 75 cents on the chain. So it's either going to be 50 cents or a whole dollar. I'd say $6.50. Well, from our current location, if we're at 24, basically, then we can make it to 30, right? That's within the $6. So I'm not reaching to look at a call spread at $30. And really, we started buying at 28 and a half. So we didn't even go all the way out. We could have gone further and kept it cheaper. Although $15 is pretty cheap, all things considered, right? I know money's relative. What's cheap for one person is not so cheap for somebody else. I get that, but I think if $15 loss scares you, probably need to rethink your account at this point. So if we did go farther out, $1 wide for $6. What this is risking is 6 for a chance to make 94. I mean, that's not bad risk to reward, huh? To be fair, you have a um, very, very low chance of making max profit, but you could easily make half that profit. So risk 6 to make 40 or 45. That's not bad. Like, what, more than 700%? And of course, since it's so cheap, you could take the other side too and build yourself a gamma iron. Why not, right? So from 24, a gamma iron is a iron condor that we buy to open rather than sell to open. Subtract $6 or 6.5 from 24, and we get 18 or 17.5 if you want to, use that half that was in there. I keep wanting to build a credit spread there. $6 as well. How awesome is that? That means we got what, no skew in here? That's weird. At the money shows skew. Hmm, that's really weird. Still, same price. Risk 6 for a chance to make 40 something. So you could buy them both. Now, to be fair, they can both lose. So your max loss could be $12 and commissions. But if you take it both sides and one side gets that big move that we were looking at, then this might pay out. Remember the thing on the chart said 5% move in 8 days. Well, we're only looking at 3 days, right? Because that's how far we went for the earnings. So you might want to rethink that and go, for the 10-day here, the options would be a little more expensive, maybe, but um, it would give you a chance to make that 5% move. And if you're thinking, well, how big is a 5% move? We can go into the trade tab here. Put it on AI and set some price slices at 5%. So where is price right now? Right here. And these are 5% steps above and below. So downside would be 25, which doesn't sound like very much. And the upside, or excuse me, the downside would be 22.72 and the upside would be 25.12. That's your 5% shift in each direction. Again, does not sound like very much. we're easily hitting that. We could tighten that up considerably. Expected move and market maker move is $6.50 from $24. When we go to $30, we're all the way out here at a level that hasn't even been hit yet in this chart. Add a slice, put it on percent, 20%, and go the other way, percent, 20%. So I just added another one, right? And we can put those slices on the stock chart. That way we can see it with price action and it makes more sense. We're still looking for 30. So add a slice, set it to percent. We just skip over 20, I guess, and go right to 30%. Could have added 25, but I don't think we need it. Percent minus 30. Now we got it on the plus and minus, right? I can't help it. We got to put it on there. Oh, I ran out. That's all we get. It's a good thing I skipped it then. So we'll set those to the chart. Oh, that's garish. All right. We can see where we closed today. 23.92. And then the slices up. And 31 way up here is a 30% move. I don't think that out of the money call at 30% move is a viable trade. It's not worth risking $6 for it because this thing does not have a history of making 30% moves at earnings, right? So that's cuckoo. So we would want to add more time like Jeremy did. He posted September, right? Plenty of time to make a move between now and September. Or if you are looking for an earnings trade, look for a 5% move, right? And a 5% move would be getting us to $25 and on the downside to 22 and a half. Much easier to hit, which is why those options are more expensive. The thing is, that's what they're pricing in to the options chain, right? A $6 move. Well, we didn't pull that number out of thin air. The market maker move and the implied volatility average gave us that target. It's way overpriced. Unless there's some news that we don't know about, there's no reason it should have a 30% expected move. That's crazy. This $3.50 expected move has a 197% implied vol average. If you take an implied vol average and you divide it by 16, it gives you a 1 point percentage for an expected move. right? So 1%, not 1 point, a 1% move. 197 divided by 16 is a 12% move all by itself. And we have another $3 up here. So that's telling us the market's pricing in 24% move. We were looking at 30, which kind of got us in the ballpark because we had the half point in there. But the market's pricing in way too big of a move, huh? But there's no money to sell it because you wouldn't want to take that kind of risk. You don't want to be the guy selling that spread for $6 and then getting run over. No, that's a bad trade. It doesn't matter that you'll win, 95% of the time. One loser at 95%, that'd wipe out what, 10 wins easy. More than that. If you're only making 6 cents on the win, you're wiping out what, like 12, 15 wins all gone in one loss. Anybody know why it's pricing so high? Did it have news or something? You got to love that. The company's earnings per share beat by 13 cents in the last quarter, leading to a 9.6% drop in the share price. They beat and they dropped. How does that even make sense? Whatever. So, hopefully, I gave you guys some insight today on putting scanners together or at least developing an approach watch list. There was a question. Sorry, I didn't catch it till now. Let's hit this one real quick. It's a question about cumulative delta. So the question is in the question tab. Rather than trying to read it out, I'll point it out and read it. So does CD, which is cumulative delta, not really do much good when comparing a pre-market high to an RTH high, since there's going to be less buying pressure in the pre-market? And then what about comparing two pre-market highs? I get the idea behind it or the struggle, but first we have to clarify what platforms CD are we using? And that's because Bookmap and Jigsaw have real cumulative delta, and Thinkorswim, um, TradingView, they have a more generic cumulative delta. It doesn't mean that it's wrong, just that it's not as good, right? I'm going to just make an assumption that you're using TradingView. Yeah, that one will work. All right. So we got ES here. I'm going to put it on to 5 minutes. I like to do a lot of my analyst work on a 5 minute chart for intraday trading. Go to indicators, just type in the word delta, and we'll get volume delta and cumulative volume delta. Now, I like the cumulative, but you got both of those choices. In this one, you're just seeing how each bar's delta moved higher or lower, and it's not tallying it up like it does down below. I kind of wanted these the other way around, this one on top and that one on bottom. So we're going to just shift those real quick, and then I'm going to scrunch that down. Now, why does it matter which platform I'm on? With TradingView, if you go in and you read the blog post that they made when they came out with their cumulative delta, they specified how they're getting their delta. We would assume they're getting it by looking at the tape. If they're hitting at the ask and above, at the bid and below. Unfortunately, that's not what they're doing. Instead, they're looking at how did the candle close below the current chart time frame that you're on. Now, I know that it gets a little weird, but think it through for a minute. I'm on a 5 minute. There's a 4, 3, 2, 1, and then there's all those second based charts. 45 seconds, 30 seconds, 15 seconds. So all of those. It sounds like a lot, but I've got 64 charts below mine that it can look at. And if a candle closed green, they consider all of that bullish. If it closed red, they consider all of that bearish. All right, that's um, it's a pretty generic assumption, right? And it takes liberties. If I go to a smaller chart, like a 1 minute, now I've only got 60 charts below me. I had 64, right? I'm running out of charts here. So you have to be very careful about how many charts you have below you and what time frame you're using. Then, how are you using cumulative delta? So for me, I like to look at divergences, for an example. Did we make a new low on the cumulative delta when we also made a new low in the price? And if we've run up and we tested the previous high on the CD, did we also test the previous price high? Right? I'm looking for those kind of correlations, those things that work together. What I'm not really doing is looking at a high that I had here, and then 4 hours later, testing that high again later and seeing, are we going to break out or not? I suppose you could, but I've never really had much insight into doing that. Not necessarily because of the flow being higher or lower, but it's think about where the starting point is. And this is what used to always screw me up. If we don't start at zero last night in this cumulative delta, which, hey, for TradingView, it did, which is cool. But on mine, on Jigsaw, it doesn't do that. So when I come in and I look at my Jigsaw, it might be showing something like 94K, and it's counting back however far my chart goes, 5 days, 8 days. Well, that really sucks, right? For TradingView, great. There's your zero line. If we double top, say we hit 10K, faded back to 6, ran back up and hit 10K again. It wouldn't matter if we hit 10K in the pre-market and then we hit 10K in the RTH, right? Because we hit 10K. It didn't imply that the volume was stronger or not as strong because it was, RTH or Globex. You see what I mean? Like, it has no impact. It's 10K. It's where we topped off and we faded off, and it's where we went back and hit again. To me, it only has relevance with what was price doing at the same time. Did we double top in price, end up with a lower high, a higher high? Now it would have relevance or value to me. And the same thing with comparing previous highs on whether or not those previous highs were both in Globex or not. If you're looking at yesterday's and today, or both today's, that you'd really want to put into context um, how high was yesterday's? Not that they visually look the same, both hitting some line in the sand, but that they both actually have the same number, 10K for an example, or 15K. And did they hit those in the same time frame, like the European Open at 2 in the morning? Or was there a run up from below zero to above zero and then it hit 10K? Or did it get to 10K right away and it just chopped there all night long? Right? You see what I mean? Like the how we got there and what we did after we got there would be holding more relevance than just having some double top, double bottom in the CD. That it's an actual real physical number that has some merit behind it. Then, last piece, I promise, and we'll wrap it up for the day. When we go in and we look at a volume footprint chart and we turn on delta here as well, we've got another picture of delta. Right now, I don't have it showing, so we'd have to turn it on. No, we don't want the profile. We want the cluster. Should have total. Delta should have done it. I don't know why we're not seeing the line down there. Usually it's got the little box. I'm probably moving too fast. It would be underneath the chart and it would show us the cumulative delta and give us some more. There it is. We just had to zoom in more. There it is. So you've got your delta for just this candle, and then separate that, and we got the total buys versus the total sales. Right? We got a lot more information. So when you're focused on this delta, cumulative delta, and all that, and you're looking at the line down below, put it into context, not just double tops and double bottoms. Um, Try not to use things like dojis and haramnis because they're going to be a little weird down there too. Instead, focus on what that number was specifically, 20K, 30K. I can't on my jigsaw, so I've never even bothered with that. But since yours resets on TradingView every night, that's perfect because you've got that's really nice. Just such a clean reset, right? So go with that and maybe go deeper, go back, see what the Globex high is. Does it normally top out around 10K? And if it spikes above or below 10K in pre-market, was there a particular earnings report to go with it? Or was it just your usual Europe open, right? Try to gain some relevance in the high or the low that was set rather than just focusing on it as a double top or a double bottom. I think you'd get more out of the cumulative delta that way. Once we get into the RTH, we should completely wipe out anything that we got in Globex, right? Because that's where the real flow begins. So if you did get a matching high or low, I would likely assume that it's from something like yesterday, where we had the market closed, but there was a few hours of trading in there. Could have had a matching CD at that point, right? So, all right, guys, unless you got questions, I'm going to wrap it up there. Hopefully, I gave you some insight into putting together a watch list for trading in the morning, getting ready to trade in the morning, and how if you have a strategy, it makes putting that list together so much easier because now you've got something to focus on. Without it, generically speaking, if you're just looking for things that are moving up or things that are moving down, you'll get too many names and it just gives you too many things to focus on. And it's like the juggler with too many balls, right? You get too many of them balls moving in the air and you end up dropping all of them. Well, you look at too many charts, you end up trading none of them or missing the best stuff. So, you know, narrow down the list, use the funnel technique and get to the smallest list possible. For me, that's four names, maybe five, a visual charts, and then a watch list of 6 to 10 names on the side of that. If you have questions, hit me up. And other than that, we're going to wrap it up, call it a day. All right, everybody. I will see you all in the morning briefing.